Thank you, FX Street, for having me here another day. It's a pleasure for me. Thank you, everybody, for being here. It's going to be a fantastic webinar today. Let's start. You have more info about me on FX Street profile page. I'm Carlos Valverde. I'm trading currencies for a living, more than 5 years of experience, and I'm going to share a little bit of know-how today with you. Thank you, everybody. Let's start. Today we have a special Christmas webinar. It's going to be more relaxed. It's going to be more, we are going to look at the overall market, what happened last year, and what we can expect for the next year, 2015. Okay, so I want it to be very participative. I want everybody to ask any questions they may have. You may have any questions. Feel free to ask at any moment. It can be any question related to trading, personal related to trading, okay, and about the markets and how you see the markets also, right? So let's start. I want to start with good news. I always like to start with good news. So I'm gonna show you this. Okay. This is the volatility chart based on the euro dollar. Okay, this is 2014. It has been half of the year. It has been not very good for trading, mostly intraday, because it's not good when the volatility goes down. It's not very good for breakouts or retest. It's not very good for intraday traders. We want movement. So this year we started with the volatility on the overall markets, mainly on futures and on Forex, going down, heavily down. We make a bottom at 49 pips, so 48 pips of a daily range on August, 26th of August of this year. Okay, that means that if you bought, if it's an up day, a green candle, means that if you bought the low and sell the high of the day and sold the high of the day, you have been made 48.6 pips. I don't know how many here it's able to buy at the low and sell at the high, and even if you are able to do that, 48 pips, I don't see it as a very big amount of pips. So it has been harder. It was harder to make profit and to trade, mainly on intraday, because the volatility was going down. Luckily, we see a raise on volatility. We have seen raise on volatility. That's good for us. It has been moving higher. Now it's 111 pips, more than 100 pips a day, and that's something more normal, something more, it's better for us as a traders to have more volatility, okay? It's normal, 100 pips a day, it's a good range. So these are the good news. Volatility, it's rising again. It's getting to levels that we are happy with them, that are useful for us, and we can trade and have bigger movements. Okay, so these are the good news, and I like to start with this. It's something very interesting. So first, I also want to ask you guys, how has been this year for you, this trading year for you? How it has been? Good, bad, fantastic, horrible, normal, average? How it was for you this year, this trading year, guys? This one says bad. Why? What happened? Too much opportunities or too less? Less volatility, exactly. Yes. The first half for me was also hard. The first half of the year. Mohan says good year. Fantastic, great for that. I'm happy for that. Okay, so more or less nothing special, right? Yeah, I agree. It has been one of the hardest years for trading currencies. But now looks like the next year we're going to have a very good year if things continue like this. We also have the Ukraine crisis, and recently we have some the ruble, el rublo, Russian ruble going crazy down. Let me see if I have it here so we can look at it. I think they remove it. They remove yeah, I think they removed the charts. Here we cannot have the chart, but anyway, let's look at the general market again. So for me, this is what I was talking about, the VIX index. You can see how the volatility is raising. Now we have a couple of days down. It's normal, but on the overall market, volatility has been going up. So I'm long volatility, something good to be long volatility. So let's look at everything. I'm going to start with the indices, all right? I'm going to start with the S&P 500. This market has been on a run-up for some time, for some years. In fact, since the beginning of the crisis, 2008, this has been on a bona fide uptrend, okay, mainly supported by good news and in the last recent times, good news and an incentive program to buy this index, to buy these companies, okay. You may not know that, but the Chicago Mercantile Exchange released a central bank program bonus. So it's like saying to the central banks, hey, you will have a discount on commissions. You can look for it. It's public. If you trade our index, our companies, if you put money into the system, basically. So what they are doing is they are buying stock futures, and the hedging and the arbitrators are arbitrating on the index and buying actual companies. It's an old strategy. It's the same thing has been done on other crises. So we can say this is controlled to the upside. Okay. You can see this when we have this last October, we have a very big pullback here on the downtrend, and we have a V-shaped reversal here. Very fast, very strong, with a lot of momentum to the upside. And then we can see that the price is stalling there. It's like it's not having any pullback. This is not normal market behavior. It's not normal to have this rally and then have like 2 weeks here the price holding there. Okay. Now we have another sell-off and another pullback with a lot of momentum to the upside. So it's getting more volatile. No, this is the S&P 500, John. So it's getting more volatile, and the reactions are getting more strange, more not typical reactions of an index. These kind of sell-offs and reversals are a little bit extreme. So keep an eye on it. Keep an eye on the indices, because if this blows out, we can have a nice move to the downside. I'm not going to be the first one to sell the top. I don't want to be the one who sells the top. But we have a lot of money down here of the longs that if they take profit, it will generate, nobody is on the other side to support the price. It can generate a big down move till 1,600 or even a little bit more. But this is a lot on the future. This next year, it's election year. Okay, it's elections in USA, and you can do a back test of that. You can see that all the years that has been election year, the S&P finished in profit, in positive. You can look at it. So we have like mixed signals. One things are saying beware, this can be the top soon, or this is a little bit extended, beware for pullbacks. But on the other side, we have good news. We have good data from the past that says this can be a good up year. Yeah, we are going to look at the DAX, George. Don't worry about it. This is daily on S&P. This is the Dow Jones, Nasdaq. You can see the Russell. Here it's a bit weaker. It's a bit weaker. And the Nikkei, it's also a bit weaker. I don't know if I have the DAX here. Let me see where I can. I think I have it here. One sec. This is the DAX weekly. German index. As I said, it's an uptrend. I mean, we cannot fight this. We will not be, technically speaking, it's an uptrend. We cannot argue with that. In fact, we have a good signal here. This is a good signal. The ones who follow me and has been with me on other webinars, you know what kind of signal is this. Please, somebody write it on the chart. It's an entry type C. I want to know the name. Please, somebody write on the chart, on the chat. Sorry. In Christmas mode on. It's a failure, exactly, George. It's a failure on the DAX. Very good opportunity. And what this kind of setup is designed is for removing when something is very low. There are many buyers already in. The strong hands, they want to remove those buyers before making a new high. So this is the best way to remove them and get a discount. Okay, why? Because we have a failure here to make a new high. So the people we know, they are going to trail the stops below previous lows here, and they are going to get triggered here, a lot of sell orders. The thing is, those sell orders get consumed, okay? They accumulate that. Somebody took those sell orders and bought them and create a reversal again, and boom, it was a trap, all right? So I'm bullish on the DAX. We make also a small high here, minor high, but we didn't get a continuation. We get a sell-off. So in my opinion, when you have this kind of charts where it's overextended to the upside, I don't like to buy new breakouts. I prefer to buy retests or pullbacks or failures, so you get a discount. But usually the breakouts, when it's so clear that it's an uptrend, it's higher risk, okay? It's higher risk. So this is how I see the DAX on a weekly basis. Let's look at daily. Again, a lot of volatility, vertical moves up and down. You will want to be long this. If you want to be any side, you should be long. But I will wait for a new high or a breakout of the 10,000 points, or keep playing failures to the downside. All right. Let's move on. Let's look at energy. We have a bona fide downtrend on crude oil. This is crude oil weekly. We are right now at 56 a barrel. It's not all-time lows, but there is a lot of weakness here. Okay. We know that some countries, they have problems if they are going to have problems if the cost per barrel goes below, for example, 70 a barrel or 60 a barrel. Why? Because for them, it's expensive to extract. How is the word? Extract, and they need to export. They need to move it. They need to refine it. So there are costs associated with the extraction of oil. So if, for example, for Venezuela or other countries or Iran or Russia, a barrel, they have a cost of 60 or $70 per barrel. If the price is below 70, then they are losing money for every barrel they sell at the market price. Okay. Instead, for other countries, they have a price per barrel of 10 or $20, mostly Arabian countries. So they don't care if the price is lower because they still have a profit. Okay. So there is a barrel right now going on the crude oil market. Some economies, they want the price to be higher. It's good for the economy. Other countries, they don't care if it's lower. It's good for them because they take the lead versus the other economies, okay? So keep an eye on that. It's a bit late to go and sort this now. It's not a good idea to sort this now. We can get some, this is 1 hour chart crude oil. Let me see if I have it here for easier charting. It will be good. I think I have it. Let me show you this because we can have some rally maybe. Okay, this is crude oil daily chart. Let me see if we have something to the left. Okay, we have a nice momentum low here. It can be a target 49 barrel. It can be a nice level. We have also some support here. It is a fresh support one. It has been already tested, but you can see the highs here. And then a breakout on the 54 level on 2009 levels. Okay, it made a high, it broke, and then we are testing it now. It is where it stopped, the price. The 54.62 level, it's acting as support. So here, my strategy, it's very simple and very easy. I will sell new lows on crude oil if we broke that. Let me make this align so it's easier. But if we start to get some demand appearing, to see some demand appears, I will go long with a small stop above 59.00 because we can get a nice short covering rally, a short squeeze. If these people start to get out, it will create a domino effect, and if you are short, you need to buy to exit. So it will generate buying power. Okay, so be aware of this. Let me go down to 1 hour chart. It's clear we're having a bit of range market now on intraday. So you have the levels. Any questions? Okay, let's move on. Natural gas. We have also a downtrend. We have a little bit of volatility. This is the Ukrainian crisis this year. We have a little bit of volatility, but now it's stabilizing a bit the movement, the range. But we can see how it's making new lows with momentum down. So I'm bearish on this. I'm bearish on this. 1 sec. This is natural gas daily, the same like you can see, wow, very, very weak. We are having some sell-off here on natural gas and some supports to the left. This can be a nice opportunity to be short for a long-term trade, okay, if you are not already. And we can see how it's breaking all the supports. So we want retest here and breakdowns below 3,120. So overall week, the energy, I'm bearish on energy. Let's move on if you don't have any questions. Let's look at metals, okay? We have not a bad year. It's a bit flat. Let's look at gold first. I have it here. This is gold weekly. This is gold weekly. You can see the yellow line. It's the beginning of the year. Okay, this is January 2014. So we are more or less, this is the open. This will be the open of the year. You can take the year as a candle and then analyze that candle, because that is going to give you information. So we are down 5,000 pips since the open of January open. It needs one more week to close, but gold has been a bit flat this year. I'm more bearish, okay? I'm more bearish to the downside, mainly because we have this downtrend move here, the break of 1,503 level. This is a nice break here, a breakdown we have last year, and this also supports that I'm bullish dollar. Usually when gold goes down means that dollar is going up. So I'm bearish on gold. Recently we have some failure here on this chart. You can see here price broke below, but we didn't make a new low very far away. So this is a small failure. It's a buy opportunity in theory, but I see this more as a short squeeze, short covering rally. You can look at these two candles. Look at them. For me, are very interesting candles. One of the biggest green candles on gold, from low to high, 7,800 pips. But I see this more as the shorts getting out. Okay, the shorts getting out. Why? Because we know below this level we have shorts getting in here below the horizontal line, but they put the stop loss above, right? So when that happens, they need to cover. That's shorts getting out, shorts getting in, and shorts getting out. But you don't see a continuation to the upside. You don't see like 3, 5, 4 candles, green candles to the upside. You don't get that. It's not continuing. You have a long and big green candle, but then it's like the general strength, the general, if this is a river, the general trend, it's down. The water is going down. So you can have green days, but after that, it will continue with the stream of the water going down. All right. So I'm bearish on gold overall. We need to be aware of one thing anyway, is that the level, the very important level we broke, let me put on weekly, we broke last year, I'm going to write it, is the 1533. This level has been not tested yet. And usually when you have this kind of breakouts, this kind of big levels, price retest them. So it's not a bad scenario, all right? We may test this level next year, and then I will be selling gold at that level, right? Usually big levels need to be tested, but still, if it's not tested, what this means? This means weakness. The bearish and the sellers are so strong that they don't let the price to retest the big level, okay? But it's a scenario you need to have in mind. It's a big and long scenario in the future, far away, of course, the price, then you need to look at every candle, how the price develop. Okay, you can create scenarios in your mind, but then you need to look at every candle, to look at how price develops over time. So before we go there to that level, we need to break this up. Okay, and as long we are below this, I will be a seller of gold. Okay, only if we start to get some demand above 1,250, I will be start to buy gold. Okay, and the same thing for silver and the same thing for the other metals. This is silver. I think it's even weaker. So the meats, I'm not gonna get on it. Grains, I'm not gonna get on it, but we have a small downtrend this year, a bit of weakness. Now we are having some pullback. But look at this market. Who wants to trade this kind of market? It's noise overall, only noise. We have some strength on orange juice, a little bit of strength, and cotton and coffee, cocoa. But who is going to trade this? I mean, you need a big account. Usually this is more for hedging and commercial traders. Let's look at the bonds. It has been flat mostly for the 10-year Treasury note, the USA bonds. It has been flat, a bit of a spike, but it's not going neither up, neither down. It's non-directional market. I will not trade this market right now unless you want to buy low and sell high. That you can do it. On the 30-year bond, it's a bit more, you can see a bit more strength. It's more strong. It's a bit going higher, but nothing special. Let's go to currencies. These are the indices for the currencies. I'm going to start with the dollar. Let me see if I have the dollar index here. I have it. So this is the dollar index weekly chart. Okay. How do you see this, guys? I want some participation by your side. What is this, an uptrend, a downtrend, or consolidate or range market? GS says up. Let's see what the people think. It's good because I want to know what do you think? Because trading is a form of communication. People is communicating through the chart. Something for me can be down, for you can be up. So Mohan Reddy says up. This one says up. And I agree. For me, this is an uptrend. It's an uptrend. Technically speaking, it's hard to argue with that. The chart is speaking by itself. The price is making higher highs and higher lows. So I'm bullish on the dollar. We have a couple of big levels here to the left. I'm going to point them out. Okay. 3 highs that has been broke. I'm sorry, but this is not the correct number. 11, no, this is not the correct number. The correct number is 80, 89, the first level, and 85 and 81. But for me, the most important level is the 85 level, is this level on the dollar index. As long as we are above that, I'm bullish, this chart. It has been broke. It's a very important level. It has been very important in the past. It's a round number. It has been broke here and tested from above. So this confirms that is bullish. This is the test. I'm sorry for this data. It's not the best data. It's, in fact, this is a CFD from FXTM, so it's not the best data to have. But this is the level here. Let me put a line. You can see here how it has been tested. This is the 85 level, tested successfully from above. Demand appeared. So this is showing you, telling you that demand is in place. The people, the strong hands have accumulated here on the down prices. They bought it. Prices making higher highs and higher lows. The dollar is bullish. So we can have some take profit here. Let me go back to the chart. We can have some take profit, but this chart is not the same. This chart is not the same. I'm going to do it here. If the dollar goes below this level, oh my God, what is that? Sorry, that is positions my platform is taking. If dollar comes below here, we can have some take profit of the longs. It's always the same thing, guys. The price is always doing the same thing over and over and over, but it's not a trend change as long as we are above 85 level and price is making higher highs and higher lows. So it's not a trend change. We can have a take profit. It's normal. Let's look at euro dollar. I think it will be very similar, but upside down. This is euro dollar daily. We can see how it's making new low the last Friday. Let me say I can have the level to the left. It's not exactly the same, but it's normal that all these people, again, if they want to close, they need to buy. So we can get some rallies on this chart, but I'm still bearish. And also we need to be aware the next year, the ECB, European Central Bank, they said that on January they are going to release a draft of the quantitative easing or the stimulus for the plan of stimulus for the European economy, and they said that they are going to release how much and on what things they are gonna to put those euros they are printing, because they are printing euros and they are gonna put those euros on some things. This can have two different reactions. One of them is that the euro goes down, euro dollar, because more euros in circulation, weaker, all right? It's weaker. But it can have the contrary, it can go up if this measure, the quantitative easing, helps to the economy and the exports and everything. It can be seen as a good thing for Europe, and the people may start to buy euro dollar. So for me, I'm bearish. The thing is, euro dollar, I think, it's comfortable between 1.2 and 1.3 level. All right, between 1.30 and 1.2, I think it's comfortable. I'm gonna write it. Between this level, I think the euro dollar is comfortable, so we can have movement inside this box. The thing is, if the euro goes down below 120 and the European Central Bank sees this as good, we can get a nice capitulation on the euro to the downside. If euro dollar goes down and the bank says we see this as a positive thing for the European economy, then you can expect a lot of sellers on the euro and a lot of buyers on the dollar. It's how it is. So keep an eye on that. Keep an eye on that. All right. So let me continue. The next currency I'm going to look at it, because the euro it's a bit the upside down of the dollar. So I am bearish euro. If I am expecting this to break these lows, but if it break 120 and then we reverse, as I said, it can be a nice long here. Okay. I hope everybody's following me. I'm going a bit fast. Time is flying. Okay, this is the expectation. In the next webinar, I will look more at the individual levels. This is more or less a yearly review, a long-term view. So let's move on the next pair, on the next currency. I'm going to look at the yen currency because for me it's something interesting, very interesting. This is a weekly chart of the yen index. The yen more or less saved the year, in my opinion. We have a very boring start of the year here. Price on a range, not going anywhere. We know that it's on a big downtrend. We know that at least. But it's not going anywhere. For me, this is reaccumulation, redistribution. That is clear because the price broke already to the downside. So we cannot argue with that. This is again sellers absorbing every time the price goes up, a seller appears. We know also the Bank of Japan is doing a heavy quantitative easing. So what else is better than selling with the Bank of Japan behind you? There is nothing better than that. Finally, we broke this level. We have a retest to the PIP, perfect retest, and a new leg down. I'm going to show you this on dollar-yen chart, the upside down. So I'm bearish yen. Let me see 1 second. Here. This is the retest I'm talking about. For me, this has been the trade for this year, trade of 2013, the best trade of the year. This is the reaccumulation I'm talking about here for a lot of time. So the bigger the base, the bigger the space. If you have months and months and months of accumulation, then you have a nice rally up. It's how it works. Sorry. And this is how I see it. This is the best trade for the year, in my opinion, on dollar yen. I'm bullish dollar yen, and I'm selling yens against all the currencies. But be aware. Let me look at the order flow of one broker, random. Okay, this is also something, I look at it a lot. You can see on dollar yen, on this specific broker, it's a big broker. Keep in mind that these do not represent the market. It's only one broker. But you can see that in dollar yen, we have 60% of the people long. It's heavily crowded to the upside. So keep an eye on that. It's like the late buyers are, oh, this is an uptrend now. After a lot of big movement up, now they are realizing this is an uptrend. And when the majority of the people realize this is an uptrend and buy, then that is when actually the uptrend reverse. Okay, similar of the what happens on the S&P. Okay, I'm gonna repeat again, because this is one of the most valuable lessons I learned. As long as the majority of the people is saying, no, this cannot go any more high, this is impossible to continue higher, and they sell, this will be an uptrend. When a critical mass of people realize and said, okay, I'm going to stop fighting, this is an uptrend, really, I'm going to buy, this is going to continue up, I'm going to buy. And those people actually go and buy, then this is a downtrend and it reverses. And they will be in disbelief again. No, but it doesn't matter, it will continue higher when the thing is going down. No, it doesn't matter because this has been up 5 years. I'm going to wait. And this is how it works. I guess, I hope you understood that. So the yen, I'm bearish on it. Let me look at Euro-yen daily. You can see it's getting well supported here. We have a nice retest. Tested 2 times. The first time was a very good trade. I think I said here on the last webinar to 145.67. So I'm overall bullish yet. It's not a trend change, but keep an eye that the herd is starting to get long. You can see how Eurogen is the one who is right now less crowded to the upside, okay? I'm gonna look at the Aussie dollar now. This is the Aussie dollar index weekly. How guys do you see this chart? Up, down, or range? Up, down, or range? Australian dollar index. Yes says down. And I agree. And I agree, it's how it is. Christie says down, that's the truth. I mean, we cannot argue with that. I was thinking maybe somebody says up, right? This will be a big error, in my opinion. But Mohan says down, absolutely, it's a downtrend. We cannot argue with that. Technically speaking, this is an uptrend. Let's look at Aussie dollar. It will be very, very similar. This is Aussie dollar. Let me put a weekly chart and clean it a bit. This is my expectation. This is one expectation I want to trade, a retest of the 86.60 level. Sorry. And this is the breakout and stop and reverse of the 80.64 level. I have the plan already done. I have my business plan already done. This is where I want to make business, okay? And it's absolutely objective, clean. There is nothing, you know, that when the price goes, no, but what I do now, no, everything is under control. That's my plan. And I know what I want to see. And when I see that, I will not think, I will take the trade. So having the plan in mind, let's look at first the chart, right? Let me remove some lines. So this is the weekly chart of the Aussie dollar. We can see how it's really weak. You can see the weakness. This is the first thing you should be looking at. How the people is selling earlier every time. New lows are being made. So this also goes into hand in hand with my weakness that I see on gold, because the Australian dollar and gold usually goes hand in hand. So there is a very big and important level here, is this one. It's fresh, it has been not tested, and it's a round number. The 0.8000 level on the Aussie dollar, okay? If really we get a nice breakdown here and a continuation down, I will be selling this as crazy, okay? I will be bearish on the Aussie dollar. Keep in mind that this kind of levels, it's normally we have some volatility there, like price breaks and then goes up and then breaks again, and a little bit of noise on the level. It's normal because there is a lot of liquidity there. There is a lot of exchange of orders from one party to another party, and you can have a little bit of volatility. So below that, I will be a seller. As I said, if we get a breakdown, but then we have a reversal above the level, I will be long. I will not let this trade run a lot because it's counter trend, but it will cover my short entry and a little bit more, okay? Then we have the retest here. We said already, if we have a pullback, it's not a bad idea to go short at the 0.86 level. Nothing more to say. I mean, we can have nice movement down there this year. So keep an eye on the Aussie dollar. I'm going to show you now Kiwi dollar. And I want you to tell me which one do you think is weaker. This is Kiwi Dollar weekly chart. Guys, how do you see this pair? Is this pair stronger or weaker than Aussie dollar? I give you 1 minute, not less, 26. Is this weaker or stronger? We know that the Kiwi, New Zealand dollar, and the Aussie, they goes hand in hand. Looks like people it's a bit sleepy, no problem, I will answer for you. This is stronger than the Aussie dollar. Why? Because when the Aussie dollar is making a new low, a Kiwi dollar is not making any new low. You can see that this is making a new low, Australian dollar. This is not making a new low, New Zealand dollar. So the Kiwi is stronger than the Aussie. So it's preferred to short Aussie dollar, and when dollar is weak, you close the short on Aussie dollar and you go long Kiwi dollar, because this is the pair where you are going to have the most rally, the most amount of pips. Let me go down to daily. Still, we have some failures here. So it's a range market. I will not go long till we break the box. So for me, it's clear. I will sell below 0.7681, and I will buy above 0.7973. This is my strategy on the Kiwi. Let me look at CAD. We need to look at CAD and pound. Swiss franc, I'm not going to look at it because it's very similar to euro dollar, and also the volatility is not very high. So I'm going to look at the pound before getting into the CAD. Guys, if you have any question, yeah, we look at that goal, Arvin, but we can look at it again. We look at that goal. Maybe you were late. If you have any question, guys, any idea, anything you want to share with me, please go ahead. Yes. So this is, let me go directly to pound dollar because it's very, very similar. This is pound dollar daily. Let me go back to weekly. Weekly, pound dollar weekly. We know the chart is telling us that we have been on a coiling pattern for a lot of years since the low we made on the crisis. This is the crisis low, 2009. I'm looking at the overall picture, right? That is the crisis low. We have a nice pullback here. I'm gonna put it, a line. And this is how you need to do your homework, guys, in my opinion. Looking at the story, at the prints, at the footprints of the chart. We make a pullback high, and then we start into a coiling pattern. This is a coiling pattern, a triangle. Volatility is going down. The price is comfortable in the middle of it. Okay, it's a value area, right? It's where the price is fair, right? It's the fairest price of it, the middle of it. And then people start to, some demand appeared last year, and we broke the coiling pattern to the upside. Usually when you have a coiling pattern of 3-4 years, you will have a nice rally, right? That is the theory. But it never happened. We broke last year and the beginning of the year, January, and it was looking like this is going to break and make new highs, and it's going to be very comfortable and very strong and blah blah blah. We broke 170, big level, But what happened? We don't have a continuation here. Price reverse with no question, with no, right? Very hard to pick this top, and then it never looked back. Let me go down to daily. All right, this is the top of we made on the pound this year. And very hard to, right? This is very hard to get out because we have a couple of failures, but very small failures, very hard to get out from this position, very hard. It changed direction without any notice. So now it's weak. I'm very the pound overall. You can see the noise we are having. This is noise, in my opinion. This is a base range. So I'm bearish. Again, you need to be aware that when prices are going lower, this is things change. Okay, if we break above this, we can get some movement up. If we break above, but as long as we are below this blue line, my expectation is a move lower. I have a level here that it's, in my opinion, a good level to be tested. Okay, why? Because it's the low. Let me put this line again. All right, around this area. I hope you can see good. It's the low of this uptrend of this line, very big, very visual trend line to the upside, and then is these lows here that are important lows. All right, to the left. This is the 52.32 level. Why I think it's a nice place for it to test? Because there is going to be a lot of liquidity. This is where I want to make business. Why? Because there is going to be a lot of liquidity, a lot of orders, and it means business. It means this is like a magnet. It's very strange that the price goes there and wander around there. Usually, price explodes to one side or another. All right. So why I like this level to trade, either for long or short? Because this is a nice. Keep in mind the banks, the hedge funds, the winners of this game, they need to buy millions and millions and millions of pounds because they are short. They are short GBP, let's say 500 millions, and that it's peanut, but they are short 500 millions of pounds from above, right? That's money. They have a profit. For them to close, they need people on the other side, and this is that's the only way for them to close with a profit without price moving higher. Okay, so we know there are going to be a lot of sellers here they are going to sell the breakout of the 52.32 level and so on. It's going to be activity. This is the play for them to close this short and buy back the 500 million pounds. Make sense? So this is where I want to make business. I will go short here the 55.42. And I will be looking to trade the 52.32 level, either to the downside or either to the upside. Okay, because this also can be the people. It's a lot. If there are a lot of buyers, it means that they can sell into them and break lower. George is asking, any chance to retest 158? It can be, absolutely. It can be. Yes, so we will look at S&P again. I think we have like 5 or 10 minutes. I'm waiting for the admin to set. to say. George, I think we can test. Anything can happen. I'm not gonna be the one who fights the price. Anything can happen at any given moment. So at test at 158, it can be very possible. Then two or three things can happen here. We either continue up, or we have a failure, right? And then it's a new sell opportunity. This is 158. It can be that at the beginning of the year, we have a take profit on the dollar overall, so all the dollar pairs go up. Euro dollar goes up, pound dollar goes up, and so on. So it can be absolutely an scenario. Let me look, I'm going to look at pound cat, and then we review whatever you want, guys. All right? Okay, good. Special Christmas. We have some time. So the cat, what happens with the Canadian dollar on weekly chart? It's a downtrend, that's for sure. Technically speaking, nothing about to argue with. Still, it has been a lot of noise on this currency this year, the Canadian. I have been bearish this year with the cat, but it has been hard to trade, at least for me, because we have some noise on it. That means more stop loss than not, right? More cost to it. So overall, I'm bearish the cat, the Canadian dollar. I'm bearish on it. Let's go to dollar cat. It's going to be the upside down of this. This is dollar cat daily. I have put some levels already on it, very big levels. Let me put a line of the beginning of the year. This is the beginning of the year, so overall it has been bullish. It has been a green day. It's going to finish a positive year for the dollar versus the cat, so it's negative for the cat. And I have been trading it, and a lot of noise. This is the kind of noise I'm talking about. You buy, for example, a breakout or something, and you need to do it 5 times until you get the movement. And that is a bit a pain on the ass. Sorry for the language, but it's a bit like that. It's how it is. You need to deal with it. It's the cost of doing business and to be a trader. So best thing is to pass maybe these pairs that are having more noise. So overall, I'm bullish on it. The dollar is making new highs. Yesterday it made a new high. Well, yesterday it's impossible. The Friday, sorry. And I'm bullish the dollar cat. So let's go down to one thing I want to take note here again. It's the level we have to the left on dollar cat. Is this high here is fresh. It has been not tested and is fresh. 117.22. You know my style. You know that I want to be a buyer and I want to buy above with a small stop below. But if this, I'm going to repeat again because you need to be flexible and more for intraday trading, as I am. I am an intraday trader. If this breaks above this level and then we see there is no continuation and there is supply appears, I'm gonna get a stopper out and reverse and go short with a small stop above, because this will be online with all the other euro pairs and pound pairs, and it will go down a bit, and then the dollar suddenly it's weak for a couple of days, because the same thing again, the people has been trapped. And I am going to let it ride a lot? Of course not, because it's an uptrend. There is still an uptrend, so I prefer to go long, okay? Christy is asking me what is the smallest time frame you trade, and usually the smallest I trade is 5 minutes, 15 minutes. I don't go lower usually than that. I can look at 1 minute, maybe if there is not a lot of volatility, or to see 1 or 2 candles. to see the volume, but usually I use 15-minute chart, then 1 hour, and then daily, weekly, monthly, very important. Sol, it's asking, is the S&P? Yes, we are going to do it, Orvin. I think this is going to be recorded anyway. I recommend you to review it because I speak very fast. We look at a lot of data and some things I recommend everybody to review. Sol is asking, is the S&P almost ready to reverse down? I'm not going to be the one who says that. I want the price to tell me, but I have seen indications of beware. Okay, it's not like, hey, it's gonna reverse. No, it's, hey, watch out. Keep an eye on it. Okay, reverse or not, you need to wait a bit. But you don't know what is going to happen. But what I know is if this reverse, it can be a crazy sell-off. Okay, what I can do, I can look at one thing if you want. It's something very interesting. Let me look at it 1 second, so I can give you more of my idea if it will reverse or not. I'm going to look at the index and at the data we have from the brokers overall, like the same thing I do with the currencies, okay? You can find this on other places, but I went here. This is the S&P 500, and 22% of traders are long, okay? You know, that is telling me that this high probability it will continue higher. Only 22% of traders are long the S&P, okay? As long as I said in the beginning, as long as the majority of the people keep thinking this is gonna go down, this is gonna reverse, blah, 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 the S&P 500, it's on an uptrend. And also technically speaking, when I see that 60% of the traders or 70% of the traders are long, or if I see that the shorts are getting out and going long, then I will be very aware, look at the price action and start selling supports if I see breakdowns, okay? Jay Correll is asking me, do you think the euro dollar will go down in the next few days? I don't know. I mean, looks like it wants to go down. The only thing I can do is because I cannot predict the future. Nobody knows, and I don't like to. You cannot know what is going to happen. So if you want an expectation, a nice kind of expectation you can do, I have put a low here. The last low we broke. Yeah, sorry about it. It's true. I mean, it's true. It's impossible to know. I work with expectation and anticipation. So this is the last low we break Friday. And, you know, as long as we are above on an intraday basis, this can go up. This is a very simple strategy you can do. Put a line. And, you know, as long as we are above the line, the last low, because this line is, you know, an area to make business, as long as we are above, it can go higher if we continue to break these lows. It can go higher, absolutely. If we move below this level 1.2246, then it will continue lower. It's very simple. It's an expectation. It's very objective, very neutral. But I think I spoke already about the euro. Technical, looking at the technical, it's weak. It's a downtrend, it's weak, and the people, you can see, it's long. The herd is long, the majority is long. So when the majority is long, usually it goes down. Okay, let's do a fast recap of the things we want to recap. You can keep asking questions. I think we have some time, 5 minutes or so. Arvin Taylor is asking, what is that type of chart S&P call it? S&P call it, it's the S&P 500. Sorry, it's the S&P 500, Arvin. Thank you, Boyki, thank you. Yeah, I will send some jamón to Barcelona on Christmas. Arvin, that is a broker. This is a broker. I'm not gonna say what broker it is. It doesn't matter. But it's a broker that offers S&P 500, and they give you the order book, the state of the order book of that instrument. It's saying, they are saying, hey, 22% of our traders are long this instrument. Boom. All right. So I think I have 1 minute, right, admin? So guys, overall, what I expect for this year, bullish on the dollar as long as we keep like we are right now. Keep an eye on the indices. We can have some sell-offs. Keep an eye on the elections. Keep an eye on the news. Crude oil also is very interesting right now. Mohan, I don't know. Let's see the expectation, because they are going to do it on January. They are going to release the QE, and they are going to say how much and on what things they are going to put that money. If euro dollar continue to move lower and the bank, European Central Bank, see this as positive, sell it as crazy. Sell it as crazy. All right, guys, has been a pleasure for me to be here. Has been a fantastic year. Thank you, FX Street. Thank you, everybody, for being here. And guys, Merry Peeping Christmas, exactly. Take care with the car. If you drink, don't drink and drive, guys, okay? Don't drink and drive, very important. Money is not important if you don't have health. Enjoy with family, enjoy with everything, and have a very Merry Christmas. Very happy Christmas to you, Merry Christmas to everybody, and I see you next year.